Hey everyone, Mark here. Welcome to another Greenbridge Investing market analysis. This is a live session, so I'm here to take your questions about stocks or symbols you'd like to see. Also, I have a couple of charts that we're going to go over here in relation to this mixed market signal that we've been getting, and especially it's especially significant for this time of year. Okay, so with that being said, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, now, so guys, put your charts in the channel now so that I can get to them. Have a list that I can go through after I am done with my charts. All right, so let's get that started. We're going to take a look first at, I'm actually going to go over the NASDAQ and the S&P first, okay? And then we'll get into some Forex pairs, especially the ones that we have positions in. And then we can take a look at Bitcoin and all those things. All right, and then we'll get into your stocks. So, first thing first, all right, is this NASDAQ 100. This has been acting relatively weak. Oh, this is the 8-hour. Hold on. Let me change this to the let me put this on. There we go. I was looking at an 8-hour chart because we will look at time frames as low as 8 hours at times, but that's as low as we'll go. All right, now, we can see here that recent price action has been somewhat bearish, right? In an area where we're anticipating bearish price action. And then we get this big, strong candle that we got today. Now, this is a higher low, okay? Today's low, this 10,880 area, is a higher low. So obviously we're going to close strong. We only have about 20 minutes. And I would anticipate that for the rest of the week, this thing attempts to push a high. Okay, which again is going to be good for a lot of stocks. But in general, though, and this is where the conflict comes in. In general, this is a tough spot to be going long and expecting great results because a lot can happen here. This thing can test this 11,300 high again and fail. So it's a risky location, especially since this area is a broader failed high location relative to this move back here. All right, now let's compare this to the S&P. And I'm going to pull up the SPY chart, which is the ETF, okay, the SPDR ETF, which is a representation of the S&P 500. And as we can see, you know, that NASDAQ is doing okay. The S&P is having a strong day today. But even with these strong days, we still haven't taken out this blue line here. Hey, Michael, and this line represents the peak in March, okay, which is what, 339, that 339 area. Now we are close, and the S&P is likely to test it, maybe even test slightly above it. But when I see a market index at such a location that it has to compete with, this is a vulnerable area, and I'd rather be cautious than feeling complacent or like, oh yeah, you know, we're just going to buy stocks and they're just going to keep going higher. It's a tough thing to do. Now, in these situations, often there's a lot of times it's better to do nothing. It's better to just let the market provide some clarity, or at least offer a better location. Now, on the S&P, that better location would be here at this 327 or 330 area. That would be a much more attractive place to be picking up stocks to hold on, you know, even for swing trades. I'm not even talking about investing, I'm talking about swing trades. This is a tough spot. Like, you know, we had a couple of stocks stop out, like ADVM. I believe a bunch of people were stopped out of a lending tree and stuff like that. And the market still hasn't pulled back. So imagine when this thing starts to pull back, stocks are going to look ugly, especially the tech stocks. Hey, Michelle, especially the tech stocks. By the way, guys, if you have charts for me that you'd like to see, please share them in the channel now so that once I'm done with my the charts that I want to show, then I can jump right into your symbols. Okay, so my point is this. There are going to be stocks right now in this environment or maybe even other markets that are going to be showing buy signals, okay? And that's fine. that's especially fine if you're day trading that instrument. But if you're not day trading, which is what we're not doing that, then you're asking for trouble. Okay, now I could be wrong and this thing can keep pushing higher, which is fine. But you know what? If I'm not in the market, or if I'm underexposed, meaning I don't have a lot of positions on, I don't lose anything by doing that. Okay, and if the market does break out and it gives me an aggressive pullback, at least I'll have the choice. I'll have an option to get involved at that point if I want to do something. All right. Now, again, in this environment, there's going to be lots of different stocks doing different types of things. We cannot be distracted by the news coming out, by all the other stuff that they're going to try to distract you with. That's just what goes on, right? That's the news is in business to attract attention, and they're going to tell you anything and everything. We need to keep an eye on the levels, because that's the most truth we're going to get about anything, are the locations and the levels. And this is definitely not a market low. If anything, we're near a market high. And considering, again, I'm not one to trade on fundamentals or opinions, but considering that we have the US election not too far away, which can bring a lot of uncertainty the closer we get to the election, I wouldn't be surprised to see a market peak, at least a temporary peak, sometime this month. Okay, just based on how people react to uncertainty. So let's see, Michelle, just a question for you. Next major targets for Bitcoin. Cool, great question, because I'm going to be going over that, Michelle. And Michael, if you have some spare time, could you look at Nicola? Sure. Okay, no problem. All right, great. So thanks for those questions. Again, if anyone else has some questions, please let me know, because I'm pretty much, the point that I want to make about mixed market, because this is a mixed market for me. Although we're pushing higher today on the S&P, and we just looked at that NASDAQ chart, which I'm just going to go back to here real quick. And we saw the NASDAQ looks like, you know, it's got that higher low, and it's going to go for the higher high, right? You see that? I mean, they're not exactly doing the same thing there, right? The S&P is pushing the high, while this thing is not exactly doing that yet. So we can't sit there and, you know, fuss over these little details sometimes. It's just the general location that I don't like. So the best choice of action, a lot of times, the best course of action is to do nothing. People have a hard time with that because people want action. Okay, people want trade ideas. And that's why day trading is very alluring, because there's ideas every day for day traders, and that's fine. But when you get that mixed up with a bigger picture trade, a common mistake is you take a day trade, maybe it's in the S&P, maybe it's in a stock, whatever, and the trade doesn't really work out, but you're like, oh, but the market's going higher. And then you hold on to that trade. Now your risk went from day trade risk, which is very small, technically speaking, you know, or relatively speaking, to very large risk, because your stops on these time frames are much broader, much larger than you would have as a day trader. So you can't get mixed up in that, because now you're comparing apples to oranges in terms of risk, and that's never a good idea. All right. By the way, if you're new to the Greenbridge Investing channel, make sure you register here for the YouTube channel. So every time I do one of these, you get an email notification. And if you like my video, please press the like button. Let me know. All right. Now, so that's it on those. Now, a couple of things I want to go over. I'm going to go over Bitcoin, right? And I especially have that question from Michelle there. And I want to take a look at some Forex pairs. So let's do Bitcoin first. Oh, hold on. I keep this. They changed some of the keys around here on TradingView. All right, so let's take a look at Bitcoin first. Now, Michelle, your question, next major targets for Bitcoin, high 13,500, low 10,500. Okay, good question. Well, with Bitcoin, we still have this resistance zone that we're dealing with, all right, which is this 11,600 to 12,300. If we can clear that zone, then I would say the low 13,000s would be within reason. Probably you'll find some resistance around that 13,000 to begin with, just as a whole number. But this resistance has been a very difficult area. We keep getting higher lows, which is a good sign, but we need this thing to clear this 12,000, right? That whole number, it needs to clear it, meaning it needs to close decisively above that level. If it can't do that, it's just going to linger. And at some point, you're going to see a more dramatic sell-off because as more longs keep piling in, it will create that situation where there are too many longs. You know, right now, there are likely too many shorts, right? And this thing is not selling off. So right now, the shorts are the ones that are probably going to get caught. And the reason why I say that is because we have this inside bar today, which is a lack of selling. Because when you get this bearish candle that we got the day before, it should follow through. If there was going to be real selling price action, it would follow through. Getting an inside bar is not follow through. So that's actually a sign of hidden strength. People still insist on shorting this, which, okay, fine, but they're going to become buyers once this thing starts to push that 12K again. So yeah, I would agree with your upper boundary. Now the lower boundary, 10,500. Yeah, that's the inflection point that we're looking for. Now obviously there are some supports before that. You have this 11,500 area, which continues to act as a support in general. It just keeps bouncing in that area. But if we close below that, then we're looking at that 10,500, which is an ideal inflection point for us because we want to, that's where we would be looking for a new swing trade long, right? It's relative to this old resistance back here, this 10,400 resistance, which cleared. We're anticipating a high probability support area there. Of course, we'd want to see a setup, but there's a lot of potential there for a nice reversal and at least a test of this resistance zone again. So the reward risk makes the most sense there. That's why I'd rather wait for that level than get mixed up in this noise. Now again, I'm being cautious. I could be wrong. This thing could break out and you could see a nice move, but I believe that the probability of that is low. So I'd rather miss those low probability moves even if they turn out to be profitable because I know over time I will not make money trying to catch low probability moves. Okay, so great question. If you have any more questions about that, please let me know. All right, so that's Bitcoin. Now, on that same token, I want to address some of these other altcoins that have been making some interesting moves. I want to take a look at XTZ, which is Tezos, because this is what you deal with when you deal with the herd mentality. And there were a couple of stocks that were showing this as well. Stocks like Assure, which I was going to talk about as well. So we had this vertical move, right, which gets everyone excited. But then it's followed by this bearish candle, right? And now look, today we got a bullish candle again. So this is confusion. And the problem with a situation like this is if you chased this, and this is the lesson why I'm bringing this up. If you bought this into the high of, what is this, 14, I'm sorry, what is that? Not 14, I can't see, 435, okay? Bought it at, let's say you didn't buy it at 2, you bought it at like 4 because you thought it was going to go to 10 because someone on a blog post wrote that, all right? Now, when you see this ugly bearish candle, now you go into hope mode. Now, in this case, it recovered quickly, so okay, you're still okay and your hope mode can continue. But a lot of times, as we saw with stocks like Kodak, we saw with stocks, there were other stocks that also pulled this type of move. Stocks like Workhorse, where they have this nice run up and then they pull back. You get caught in hope mode and either you're going to bang it out at the bottom because you're a weak hand at that point, okay? Or the thing is going to pull back a lot further than you had hoped and then you really just get stuck in the position, right? Those are the disadvantages or the cons to buying at a high and why I don't like to buy at high. So now the market will deceptively reward you at times, like this outside candle. You're like, oh yeah, look, it's going up. See, I knew it was good to be long. But over time, if you get into the habit of chasing these, sure, you'll get some rewards here and there, but over time you will not win because of that psychological situation. You get caught as a weak hand and you're most likely going to get out of the position at the least opportune price as a result of being scared. All right, and that comes from having it at a bad price. So I just wanted to point that out. Yes, this thing is pretty strong. I mean, this outside bar is a good sign here that it's bullish, but I wouldn't get involved in something like this until I see a solid support that makes sense in terms of the rules that we follow. And the rules are what really provide or produce our performance, not reacting to this. Like this, buying this thing right now would be a reaction. Our rules say nothing about this, right? This is not within the scope of our rules. Perhaps if you're a day trader, there could be something there, but not for our swing trade rules. So anyway, I just want to point that out. Okay. So great question. Let's see. So Michelle, okay, and Michael, I'm going to get to yours on Nicola when I get to the stocks. So don't worry, I didn't ignore your question there. Okay, SPEC, sure, we'll take a look. And Michelle, the volume is key to finding turning points. Well, okay, volume. I don't look at volume, especially on these larger time frames. The reason why, and for stocks or for something like Bitcoin, is because volume can be misleading. The exchanges that the volume information comes from, they don't provide all the information. Okay, you can put hidden orders, whether it's a stock or even Bitcoin. You can put hidden orders in the market and all that kind of stuff. So how do we know the volume that we're looking at is a true representation of the volume in terms of how we need to use it? That's why I don't look at volume. We can compensate for that lack of information by looking at the speed of the price action. Because often when price is moving quickly, often there's a lot of real volume. I mean, you can obviously there's volume pushing it if it's moving quickly. Because large players hide their volume, or they try to find ways to hide their volume. They don't want those obvious signs on a chart that everyone can see. Okay, so that's why I don't use volume. And I stick more to levels and price formations. They give me much better information. Okay, so what I want to do is I want to go over a couple of these Forex pairs. I want to just take a look at the dollar Canadian because this is the trade that we sent out yesterday. I want to take a look at the New Zealand dollar, which is the trade of the week that we sent out. And then we'll take a look at the stocks. Okay, we'll get right into the stocks. Stock market's closing here in a couple of minutes anyway. So dollar Canadian. Now look at this thing. So I sent out that swing trade yesterday. It was based on the fact that on Friday or Thursday, we had the inside bar close. We had the attempt to go higher, and then we got this pullback, right? And that's really what I was going for because I was watching this thing turn on an 8-hour chart. In fact, I'll show you what I was looking at. Okay, and, oh no, wait a minute. That's an 8-minute chart. Hold on, 8-hour. So on the 8-hour chart, what I saw yesterday was this higher low situation in this inside bar. And an 8-hour, although it's a smaller time frame, it's an adequate time frame for our strategy. We won't go any lower than that. So I saw this bullish candle coming, and that's where I basically set up the order at 33.25. Now, as we can see, the order activated, and now we got this noise. We got this nonsense. All right, which, hey, it's just part of the game, no problem. That's why I put the stop much lower. We didn't get stopped out yet, right? This low is 32.29. My stop, as you can see, can I see that on here? I should be able to, right, my stop is at 31.85. So we're still okay with this. If this turns into a nice bullish pin bar by the close, by the Forex close, this thing should be in good shape. The location is still favorable. So even if we get stopped out, all I'll be doing is looking for another entry to get back in. Okay, so just something to keep in mind. Also, this is why we are going against the recent momentum. And we are going against the fundamentals, obviously, because the dollar has been weak. And that's what we're playing here. We're looking for that dollar bounce. And sometimes, you know, it's a process and you have to be patient with it. So that's why I want to point out, this is why we won't exit something like this early, because, you know, there's really no reason to. We just have to let this thing, if we get that double bottom here and that next candle we get is green, we should be in good shape, okay, with this pair. I mean, look at this location. This location is just ideal. We're just not, you know, I took that early setup on the 8-hour. You could say it was premature relative to the daily chart. Okay, no problem. But if I see that inside bar, if I get stopped out, or we get stopped out and I see that inside bar, I'm going to be getting long again. All right, so I just want to point that out on the dollar Canadian. Also, let's take a look at the New Zealand. And I'm going to get to your questions. NZD, USD. Because this also activated. All right, now this was the play of the week. And again, this is the same idea. right? Because we're betting on a strengthening dollar. So we sent this one out as a trade of the week because it was, we send this out to all of our members and free subscribers as well. And I didn't want to send out my Canadian to everyone, right? That was only for our people that are subscribers, the paid subscribers. So this thing activated and it made a low of, what is it, 65.24, and still has about 50 pips to go before it reached our target. So still no target, but the momentum is still trying to go our way, right? So there's nothing to do here but let this thing do its thing. Now, this is a tough trade because it is counter trend. And we know that going into something like this. This is why risking 1% is so important, especially on counter trend trades. This could be actually setting up for a buy signal. But if that dollar strengthens, this thing will be okay. So we just have to let this thing play out. All right, I just want to point that out. But this is a buy signal developing, especially with this old resistance, new support area, and we got a bullish pin bar. Now, we still have a few hours before Forex closes. So we have to see how that goes. All right, so I just wanted to point that out. Now, let me get into your stock questions here, because those are the markets I wanted to cover. Now, Michael's asking about Nikola. All right, let's take a look at Nikola. By the way, if you're new to the Greenbridge Investing channel, please make sure to subscribe to this YouTube channel here. And if you like my video, give me a like. Let me know. All right. If you don't like my video, that's okay too. Let me know so I can make these better. All right, now, Nikola. So Michael was saying, if you have some spare time, I'm at break even at this point, was in doubt to hold or to sell it and wait for better prices with the market acting like it is. All right, well, in this case, Michael, here's the situation. Although the market is mixed and the S&P and the NASDAQ are acting funny, you know what? The NASDAQ is strong today, right? So maybe that momentum will follow through tomorrow. And if that's the case, this thing is likely to break higher, all right? The way it looks right now, you have a gap, first of all. You have this gap right here, this price gap, which has not been closed, which is a good thing because it can act as a support. The low is like, what, 40 and a half you're looking at? That's basically your minor support that you're dealing with right now. You also have this current price action is a consolidation. So if you take out today's high or the previous day's high, 44 and a quarter, you take that out tomorrow, I mean, technically, this doesn't look bad as a long. So you have some room to play with here. If you don't have a large position and you can handle a little bit more of a pullback, it's not a bad long position, okay? Your next inflection point as far as resistance goes is 61.20, around there. That's some room to play with. I mean, even if this thing pops 10 points, that's not bad, and you know it can do it. So I wouldn't be too worried about this one as long as that NASDAQ doesn't sell off. And if we go by what today's price action, right, that thing is pretty, that thing turned. So I would give this a chance if it was me. All right, so I hope that helps. Great question. So let's take a look at, you mentioned SPCE. Let's take a look. SPCE. Now, okay, so now this one, as you can see, with the NASDAQ turning like it had today, right? We had that bullish candle. This thing should be performing better. Now, although I know this thing is kind of news driven and it's a lot of drama with this one, here's what I like about it. So although today it's acting relatively weak, you have this, right? This area right here, this old resistance, should be acting as a support, and you're getting some hesitant price action. So something like this, if you get a inside bar tomorrow, like this little pin bar, I don't like when they're that small like that, all right? I would rather, so in this situation, I would rather see a high get taken out. At least this high back here, which is 1950. Something like that would actually generate a buy signal in this thing. And your risk can be defined by today's low, which is 1783. So you figure 17 and a half, something like that. And you have some potential reward there if this thing tries to make a run for the high 20s again, right? So I could see risking $1.50 to try to make $3. That's possible with this, okay? Again, now I was going to say you need the market to support you, but the thing is, this thing is not exactly following the market, as we can see. because the market had a nice turn. I would expect this thing to be doing a little bit better. So this thing is actually just driven on its own agenda, which, you know, you don't always have to trade stocks that trade with the market. There's nothing wrong with that. All right, so that's what I think of that one. Okay. Okay, Michelle. So yeah, so I answered your question about the volume. Okay, Michael, is volume a good representation of the herd, us newbies? Well, that's a good question, Michael. That's a good question. You know, look, I'll put, let's pull up. Let me see. Let me pull up another stock here that people are asking about. Oh yeah, Pow, you had a question about Yelp, right? Was it Yelp, or was it Yext? Which one was it? I can't remember. I know it was one of those. Okay, hold on. And I want to use this as an example with volume, because Michael brings up a good question there. Hold on. I'm having computer. I was hoping you can stock changes from bearish. Okay. I would like to break above the retest of 16, be signs of bullish trend change, and trade it accordingly, waiting for reach. All right. So I know you had a question in the chat room about one of these. So if you could bring up that symbol, but I'll bring up the symbol you have here, which is FFBC, right? And I'm also going to address volume in the same with the same example, because you have some good volume questions here. So I'm turning the volume on, right? I usually keep this off. So let's just kind of see, you know, the significance. Now, Powell's question is, would break above and retest of 16 be signs of a bullish trend change, and can it trade in and can trade it accordingly, waiting for retraces to buy setups? Well, so he's mentioning 16, right? And all right, so that would be this area here. And Michael's question is volume basically a sign of, can it sort of represent the herd mentality? Well, in the way you're asking, Michael, yes, it can represent the herd mentality, because that's pretty much who's not going to hide. That first of all, the herd is not going to hide their orders usually, and they're not accumulating huge positions, right? So the volume is likely a representation of the herd, but even with that information, like so here's how we should be using volume in theory. When a market tries to break out, like this situation back here, okay, here let me draw like a box there so you guys can see what I'm talking about. So like this breakout right here, right? It's a breakout, broke above this high. So in theory, that should be a long, right? Well, according to like a breakout strategy, and one thing they say is volume should be increasing. Well, was volume increasing on that particular candle? Up until that moment, you can argue that it was, right? Look, if I hide all the candles and we just look at the volume, we could say the volume histogram bar was higher than recent volume histogram bars, right? So you should say, oh, okay, it's breaking out on increasing volume. But average volume, as you can see, has not really done that well. Also, average volume, which is this blue zone here, that's average volume. You know, average volume is increasing over time while this thing is trying to find a low. But even then, that didn't really help too much, right? Because all this thing is doing is it's in a range. So if I was getting caught up with volume, I would probably be making a lot of mistakes in this range, and then look, probably get stopped out at the range low, right? And how does volume behave leading up to now? So as we can see, volume has been shrinking in this thing while the market has found a range. So what do I do with that information? Should I now avoid breakouts because volume is just low? No. You know, should I avoid range lows and opportunities? Like, what about, look at this fake out. Now one way you can use volume, I'm going to point this out now, and don't use this like as an absolute, but one way you can use volume, which is not an obvious way, is whenever you get a failed breakout, okay, a failed breakout, notice you get a volume, usually get volume spikes in the area. That's a contrarian point of view, but that's where it can become helpful. At least, if you get a failed breakout and you see a volume spike, you know that there's a chance that it's probably going to fail. It's not going to go much lower, right? Because what is occurring at that failed breakout? Well, first of all, it's a breakout, right? So this is all people see at the time, and they see the red when that green candle is fully red. That's all they see. So they're banging it out. Shorts, longs are getting stopped out. Longs are exiting as a reaction. Maybe there's some news, whatever. Shorts are piling into this thing, right? You get the volume spike. Now the next day, or after a couple of days, you got a gap, and then you got the volume spike. So you didn't get that perfectly, right? It didn't spike. You didn't get a nice clean spike on that failed low. You got the volume spike on the gap after, and then this thing failed to go lower, right? So that's one way you can use volume. It's not perfect though, but at least it gives you another piece of information to consider if it appears. All right. I still don't, even though I know that, I still don't really use that. I don't use that because a lot of times it could just be noise anyway. But if it's there, hey, it's just another tool. So now to answer Pal's question, would a break above and retest? So 16. Now let's take a look at that level, right? Let's evaluate that level here. Let's look at 16, which is right about here. Okay, that's the range high. So yeah, so his question is, would that constitute a trend reversal? Well, yes, it would. You need to take out that high. You need to take out that range high. It needs to go decisively higher. Where people make the mistake is it takes out the high by a little bit. And they're like, oh, okay, trend reversal. And then they start buying it. That's too early. Now, you do have a higher low in place, which is an early sign. You also have an inverted head and shoulders, which is another sign. Those are all signs that add to the argument. But to confirm, yeah, it needs to go decisively higher and then retest this old range high resistance, and that should act as your new support. That is more likely to be a trend reversal. Okay, and you're likely to start testing, working your way back up to that old support, which is way up here, the 22 area, right? That's how you have to look at that, using structure. So not getting mixed up with volume, not getting mixed up with any type of news or fundamentals, just using price structure to guide your decision making. All right, so I hope that answers your question there. Michael, log is not active on your chart, but your chart looks different than mine on SPCE. Okay, let's go back and take a look. Now, I mean, that really doesn't, whether it's a logarithmic chart or not, doesn't really make a big difference for me. Here, I'm going to turn the volume off. And let me see. So log, here, I just changed it, right, to, I toggled it to a log scale. And, I mean, again, it's not a huge difference, really, not dramatically different. There's a difference, but it's not really going to affect my decision making, especially for recent price action. All right, so good question. That's often a point of confusion for a lot of people. But for the way I do things, and for the structures that I'm measuring, it doesn't really make a big difference. Okay. So thanks for pointing that up. Now, DJ, HRL. Let's take a look. HRL. Hormel. Oh yeah, I believe Andrew's mentioned this one a few times, right? The food stocks. Well, yeah, this is in a tough spot. I wouldn't buy this thing. Definitely not. Now, and Pao, by the way, Pao, if you're still there, you had a question about the options. Just type into the chat. Yelp. Okay, I was just saying Yelp. All right. I'm going to get to that too. So Hormel. Now, DJ, here's the thing. So this resistance back here, that's what's in play. 51.5 area. We're fooling around with it, as you can see. We tried to break higher. We kind of pulled back. Today is trying to go higher again. I don't like that type of price action at all. And I mean, for longs anyway. I wouldn't short this thing because, you know, I don't like to short strong stocks especially. So this is a vulnerable area. This is a failed high location. So you'll obviously need the stock market to pull back with you. If the stock market doesn't pull back, this is likely to just continue to push, but I just don't like this location. I prefer to get involved in something like this. I prefer to see a retest of an old resistance like this price here, which is 49, basically 49 and a quarter. So this location where it is right now is ideal if you're long and you want to lock in profits, right? This is ideal for that. Taking money off the table, reducing risk, perhaps holding a small position to see how much further it can go. But the location in general is risky for new positions. Okay, that's how I see that. So thank you for bringing that one up. I hope I answered your question there. NK. Let's take a look at NK. Let's see NK. Hold on a second here. Let me just take those lines off. All right, hold on. Okay, now we're going to pull up NK. All right. Now, so NK, right off the bat, I see a bullish structure. I see this. Okay, that's good. That means that's what you're working with. That's what's in play. Second, I see this old resistance area here, which should be acting as a support. And now you're getting the bullish pin bar. So you are dealing with bearish momentum. You have these lower highs and lower lows, but as you can see, the broader structure is bullish. So this isn't a good location for a swing trade long. Quest. Okay. So I like this pin bar. Of course, you'd have to take out that high tomorrow, which is what the high is 960. So you're looking at 980, 985, maybe that $10 area. That would be the buy signal. And you could measure your risk slightly below that pin bar. The low is 868. So that stop would have to go around slightly below $8. You have to give it some room. Okay, and you got some potential there. Nice chart. I like that one. So definitely a long candidate. All right, especially if the stock market can find some room to follow through a bit and test some highs. You know, this thing at least is in a position. It's nice, even if this is not a market stock, that much more confidence. So I definitely like this one as a long. As long as it can take out that high tomorrow, because you got the structure, you got the setup, you got the location. Okay, so great candidate. Thank you for bringing that one up. Are you in this one? Oh, one of Andrew's stocks. Yeah. So this is NK is definitely, I could see why. Okay, we just need to take out that high. This one might be a good candidate for a swing trade tomorrow. All right, we'll be keeping an eye out for that one. Okay, so Michelle. Oh, no, so let me get to Yelp, and then Michelle, I have your question. So Yelp. Now this is the one that Pow asked about, and Pow is asking about shorting Yelp and using a put option. Now, as you guys know, and girls, you know that we are not big fans of shorting stocks outright because of the gap risk, and you know, some news can come out of nowhere, and next thing you know, the thing gaps 20 points higher, and now you're caught short, right? So we don't like that. If we usually, when we short the market, we like to use index ETFs, whether it's the IWM, the Qs, the SPY, you know, one of those, or even the DAX, right? We like to short those. The other choice with stocks, if you're into shorting stocks, is using options, because buying a put option limits your risk if you're wrong. So if this stock, Yelp, which it's unlikely, but if there's a gap in this thing gaps $5, the most you could lose is whatever you pay for that put option. So Powell's question was, you know, what about shorting this thing? Is this thing a short in light of the confusing market? Well, hey, you know what? You do have a double top here in place. The double top is a lower high relative to these highs back here. So you have that going for you. It is aggressive. Now, Powell said I'd probably say it's aggressive. It is aggressive, and the reason why, though, is because it hasn't taken out this low yet, and we can still argue. It hasn't taken out this low. And we can still argue that this thing is in a somewhat neutral or bullish trend because you do have these higher lows, higher highs, and you now have this range. So, okay. So DJ. Oh, all right. So I'll get back to you there. I'll get back to you on that one, DJ. All right. As a short. Okay. So no, so Yelp, as far as Yelp being a short, and using a put option, let's look at the setup. Now you got the bearish candle, nice bearish candle off the double top. You do have a bearish pin bar, and today it's trying to hold. It's not a bad idea, okay? Buying a put option. I guess you would be looking at, let's see, strike price 20, probably 22, or maybe the 23 strike price. Where's this thing at? 23.45. Buying a put slightly out of the money, a month. I would buy a month out on something like this. You need to buy some time. And if the market pulls back in that time, you could do something with that. That's not a bad idea. At least this is not a clear-cut bullish stock. It's not clear-cut. If anything, you're range bound, and it's likely to test the low of that range, especially since you got this large bearish candle that's in play right now. I mean, that's really like the key to the momentum right now is that thing. And if you start another leg lower, especially if the stock market pulls back, this could be a good candidate for a put option, short. I mean, a long put option. So yeah, I agree with that one, Pow. Thanks for bringing that one up. It's just, yeah, it's aggressive for that one reason. But if you're keeping it small, you only have one put. I mean, how much could you get beat up if this thing completely goes the wrong way on you? It's whatever that premium is. I don't know what the premiums are because I haven't looked at the options in that stock. But if it's a couple of dollars, if it's maybe $1, $1.50 for a month out, maybe $2, that's not bad. I mean, you're risking $200 to try to make, a couple of hundred, one-to-one reward risk. You can't really be too optimistic with long options, especially since time is working against you. Okay, so something I'd keep an eye out for that. But thanks, that's a good idea. Thanks for bringing that up. All right, Michelle, swing trading question. If tomorrow's Bitcoin candle takes out the high of today's candle and you enter a trade, where would you put a stop? All right, good question, Michelle. So let's jump back to Bitcoin real quick. Now, because it's possible that we get an inside bar. All right, it's possible. We close today and this thing closes the inside bar, and tomorrow or overnight, it's possible that we take out the high, right? Which is 11,625. Now keep in mind, Michelle, that would be an aggressive swing trade because of the location. And you're dealing with this resistance right in front of you. So where I would put the stop on such a trade would be below these lows right here, which is what, the 11,130. So I'd give it a little bit more room than that. So probably 11,000 or just below, like 10,950 or something like that. You have to give that some room because it can fool around and fake out. So that's what you're dealing with there. And it's a tough spot, like I said, because if it blows through this resistance, you'll be in great shape. If it doesn't blow through the resistance, then it can be tricky and you're likely to get stopped out because of all the noise. So that's why I'm very reluctant to send out something like that, because although it may push through, the probability is lower, and I prefer to buy it at a support where I know the probability is much better. It may not pull back to 10.5, but if it does, at least I know my chances are better there. So that's how I would judge that one. But to answer your question, yeah, that's where I put my stop. Just keep in mind, you're dealing with this resistance, which is not, it's not an easy area. What's working for you, though, is obviously the trend is bullish. And usually in a bullish trend, resistances get taken out, supports hold. Theoretically, that's what should happen. But, this has been a tough spot. So we have to see. Only the market can determine that outcome. All right, so great question. Florin, can you look at Jumia? Does today's pin bar count as a bullish sign? Let's take a look. JMIA. So, what a mess, right? This is why, and I was pointing out Tezos before on that how when it goes vertical, why you don't buy those. because then you get caught in this kind of price action, right? This is what typically happens. Not all the time, but it typically happens. And then you get stuck in a gap. Oh, that's really difficult. Very easy to bang out of that when it gaps. So Florence question, is today's candle a buy signal? Let me see. Well, it's not in the best location, but it is a bullish pin bar. So here's what I like. I'll tell you what I like about it, Florin, and I'll tell you what I don't like. So I like that this thing's generally strong. Okay, I like that it has this bullish structure, this nice bullish movement. I like that it is basically a higher or low area, and that you're getting a bullish pin bar. I do like those things. What I don't like is the gap, because that gap could be a sign of some momentum if this thing doesn't follow through. So today, yes, this is a bullish candle, and if you take out the high tomorrow, which is 1350, that is a buy signal. But because you're dealing with this gap in front of you, you may get some antsy selling, okay, and it may fool around a little bit lower. So usually in these situations, what I'd rather see is some structure develop, meaning we get this pin bar, tries to go higher, next few days or maybe into early next week it goes lower and gives us the failed low. I would be much more comfortable with that than buying into something like this. Now again, I could be wrong. This thing may just pop right back up, but I know the type of trades that I like to take, and I know their probability over time. So that's what I prefer. That I play the probabilities. So, but to answer your question, which is is it a bullish sign? Yes, it's a bullish sign, but because if you had all that bearish activity before then, I would not take any new positions on this. If you're long and you want to give this thing a chance to try to recover, okay, I would give this a chance. All right, you do have some bullish things going, but as far as a new position, I would wait. Okay, so I hope that answers your question. All right, so let's move on to the next one here. By the way, if you're new to the channel, make sure you like my video if you like it. If you don't like it, I'd love to know why, so I could make it better. Okay, and also make sure you register for the Greenbridge YouTube channel so that every time I do one of these, you get an email notification. All right, so DJ. Now, DJ mentioned for one of Andrew's stocks. Okay, hold on, Michael. All right, so let me just catch up on these here. Would you consider MDB as a long playing the range? All right, let's take a look. MDB, that's Mongo, isn't it? Mongo database. This is one of Henry's picks originally, which had a nice run. So now, Michael's question is, would you consider MDB a long playing the range? I like the location, Michael. I mean, it's a range low. Definitely like that. I like even though this previous candle is really nothing, I like the indecisiveness of it at the location. I like those things. You have a nice strong close today. So yeah, this is worth, you're at the range low. It's worth a try. I would take a chance on this. If I don't have a lot going on, meaning I don't have a lot of trades on, and I'm looking for something decent, at least you're at the range low. What's the low here? 187.25. So you're looking at 180, 186.85 maybe, 186.5 as a stop, and you have some room to play even if you go back to the middle of the range, which is like in the 200s. Yeah, so it's worth a try. It's an expensive stock, and you just have to be able to deal with that noise. It can be very noisy, and the thing moves. So at least if anything, you're at a range low and not a range high. So I like the idea. See, for someone like us, we can't call all these. Like someone mentioned the one before. Which one was it? That stock that was coming off that low. Which one was it? Hold on. Was it the one that Andrew mentioned? NK, right? Like NK. That was a nice situation. This one's a nice situation. You'll find stocks that are in good situations, but we can't take them all because we don't want to get caught in case there is a big pullback. We don't want to get caught with too many positions. It's an important consideration. So we have to be selective, and only pick a couple, and that's it. Position, okay, so Michelle, position trading in Chainlink. When to enter for the long term? All right, that's a good question. So let's take a look at Chainlink. That's another one that's been active recently relative to the other altcoins. I mean, look at that. That's nuts. So, and again, just like I pointed out with Jumia and just like I pointed out with Tezos, obviously this is not the time. You don't want to buy into a vertical move like this, right? So what's the high here? 1610. This who knows? Maybe it'll run another dollar or two, okay? I don't know. But all I know is this is the herd mentality. Not a good time to buy, as you saw like with Jumia. Let it pull back. So Michelle's question, where would be a good place to buy this thing for the long term? Well, Michelle, the first thing that I see here, I'm looking for an inflection point, like an ideal inflection point, and that's all the way over here, which is like $8 or just above $8, which is hard to believe that it can ever get back there looking the way it looks right now. So that would be the ideal spot. Will it go back there? Don't know. So a more reasonable spot, or maybe we could say a more aggressive spot, would probably be around this area here. We had this little noise right here. What is that? 10 and a half. That would probably be a little bit more I don't want to say aggressive, but just more reasonable, all right, because it can pull back there. That's what I would look at. I wouldn't look at something too tight like this, which is like 12.15, because everyone's going to be looking at that level, and you watch, people are going to get caught, especially if this thing has a dramatic pullback, okay? So I would just wait, and if it never pulls back, hey, you know what? We'll find something else. There are always more opportunities. Usually you're better off waiting for that pullback and not chasing these things. So those are the two levels I'd be looking at, Michelle. Yeah, it sucks when you miss them. I mean, I even wrote a report about this one, and I missed it. So, you know, we don't catch them all, but that's where I'd be waiting. So I hope that answers your question. Great question, by the way. And again, that's long term. Okay, so now DJ, so you were talking about shorting. I guess HRL, you were talking about shorting HRL. So is that the one that you meant? I wanted to short HRL. Thought about buying it August 28th, put option. Okay. So as far as a short goes and using a put to short this, I mean, you are in a location that favors that, okay? You are in a failed high location. Now, it's hesitating though. When you short something like this, and you get that initial bearish candle. See how we had that bearish candle the other day or yesterday? We should not get this type of candle today if this thing was going to be a short. So I would wait at least for another bearish close on something like this, or at least you take out the low of that bearish candle, 51.31, if you want to play with a put on something like that. And yeah, your target, you should probably get out sooner than that, because again, you're fighting something that's generally, I mean, it's not dramatically bullish, but it's bullish. We do have higher lows, and it is at a higher high. So you are fighting the trend, which again, that's okay as long as you understand how to adjust. So this would be your max target right around there. And 49, so that 49 area, so you're looking to get out before then. That would be the way to adjust your expectations on something that's generally strong. Now, could I be wrong? And could this thing really get hammered along with the stock market if the stock market gets hammered? Sure. And in a situation like that, perhaps if you're still in the position, you can try to let it ride. You know, that's when you make an adjustment. So that's how I would deal with something like that. But I would be more selective as far as the short goes. At least wait for the low to the of this previous bearish candle. At least let that get taken out, and have your options strike prices. Obviously, you're going to need to know all that stuff in advance, and make sure you buy at least a month, 2 months, something like that. Don't do this with a weekly, because that's when you do with a weekly option, you need them to move like right away. And if they don't move right away, you're not going to make money with the long option. So I hope that answers the question there. It's not a bad idea, especially if you get that pullback on the stock market. Okay, that could be a nice little play for you. Those aggressive trades work out very well when they work. Okay, so Michelle, no problem. And I had another question here. Gold and silver. All right, Shervin, let's do it. Gold and silver. So I'll go over gold first. I'm glad you brought those up. Usually I cover one of these, but you know, I had so much other to cover, that's why I didn't. So let's take a look. I mean, gold. I had a question in the chat room the other day about, you know, is now a good time to buy into gold or silver, was it? And this is just like Jumia, just like, what's that one that Michelle just mentioned? Chainlink. I just can't even think anymore. Just like Chainlink, this is typically what happens when you chase. Just a few days ago, people were saying, oh, gold's going to 5,000. Buy gold, buy gold. When the news outlets tell you to buy gold, bad time to buy. Okay? And this is typically what happens and why we always discourage chasing. It's hard to believe that gold would do this. And you know, you can argue and say, oh, but gold's fundamentally strong, and this and that, and the dollar, and inflation, and the government's going to print money forever, and blah, blah, blah. Okay, but you still had, what is this, 100 points? Let's see, what's the high there? 2075 is the high, and 1862. Okay, so it's 200 points if you bought that high that you had to sit through. That's very tough to sit through if you bought that high. Psychologically, this makes you a very weak hand. Most likely, you're banging it out, hopefully taking a small loss. But if you're not taking a small loss, now you're caught. If you have an opinion, oh, gold's going to come back. I'll just hold it. Okay, now, gold, although may hesitate a bit, and it may start pushing lower. Okay, hold on. I'm getting a message here from YouTube. Okay, YouTube is not. All right, if you guys stop hearing me, just let me know. YouTube is giving me an error. Now, so I would wait. All right, to answer your question on gold, I would wait and let this thing stabilize a bit. This is just a little too early. So what would I wait for? A double bottom or a failed low. Now it may try to pop up a bit and people are going to rush back in thinking, okay, I got a better price. But I would be hesitant, especially if the dollar finds a short-term bottom, which is what it's trying to do. That's why we're long the Canadian, the dollar against the Canadian. So if the dollar finds a short-term bottom, this thing is not going to be pushing new highs. This thing is likely to push a little lower, okay, until it finds a support. Now the nearest support on gold, the nearest technical support is like you got a level here, all right, and then you got a level here. Well, hold on, here, back here. Those are the levels. So, okay, yeah, either it's my internet connection or I don't know what that's about. Sorry about that. So those are the technical levels. I would not rush into this. All right, let this thing stabilize a bit, let it produce an inside bar, let it produce a failed low, something. And it would be nice if it could do it around one of these levels. And that's where I'd be looking for the next swing trade long on gold. I don't want to get into this thing too early. It's a very common mistake to get in too early, right? On the first pullback, everyone rushes in. Now, silver is going to be the same deal. It's going to follow gold. So, like I explained to one of our members in the chat room who asked me about silver, you know, is now a good time to get into silver? And I said, you know what, gold is going to give us the signal because silver is just following. So let's take a look at silver real quick. XAG USD, and silver is the same situation, right? It's following gold. So these get nasty when they turn, they get nasty, and that's why we don't chase them. Because you don't want to get caught, you don't want to be the one caught at the top there. So just like gold, I would wait for silver to stabilize. One thing with silver, since it typically follows, you know, even if silver gives like a nice clean signal and this and that, I would still go buy gold, because if gold doesn't turn, silver is not going to go very far. It's not going to go on its own. So I would wait for those inflection points. Now you do have one here on silver. You have this level here, which was a hesitation area. That's an inflection point. It's a tight one, but it's one. So, okay, you have that, but you know, if you're not long silver, I would just be very hesitant to put on a new long now. I would wait for that second attempt at pushing the lows and watching that failure. A lot of times these things do not produce a simple pullback and then, you know, pull back and go. A lot of times it doesn't produce a simple one. A lot of times it'll produce a complex one. What if this thing starts to range, you know, like it's done so many times? Here, I doubt it'll look like this back here because there's just too much going for it right now. But I would just like to see some more stability, to answer your question. I just think it's a little too early. Like I said, I could be wrong, but I know the levels that I want to see. And like I always say, like in the TradingView articles I write, I look for rules to be met. And if the instrument can't meet my rule, then I just don't get involved, because I'll find something that does meet my rules. Okay? You don't have to force trades. All right, so I think I pretty much got everyone's questions here. Do I have any other questions? Again, thanks for all the great questions. Everyone asks such great questions. If I missed your question, please ask again, or we'll follow up in the chat. I think I got everyone's questions though. So again, I want to thank everyone for watching. If you're new to Greenbridge, make sure you check out our website, greenbridgeinvesting.com. All right, we have swing trade signals by text and by email. We just sent out the dollar Canadian yesterday. All of you know because you got it by text and email. We have portfolio management ideas that we send out by email as well, and we have our chat room. So make sure you guys check that out. Make sure you like this channel or subscribe to the channel if you haven't. And if you like my video, let me know. Okay, so it lets me know I'm doing something right rather than something wrong, because a lot of people tell me I'm doing something wrong. So but the real people that matter are people like you who watch the channel. So if I'm not doing something right, let me know so I can make it better for you. All right, so I want to thank you guys. Again, I'm going to wrap this up. I'll see you in the chat room. I'll be in there early tomorrow. I want to thank you all again. Enjoy the rest of your day. Thank you for watching, and I'll talk to you then. Thank you.